Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, following our new video format, we're going to be hitting the Elliott wave account first and our basic analysis at the end of the video. So without further ado, let's get into it. We are looking at the SPY today and we are starting here on the daytime frame, looking from the March low up. Now we have 5 primary wave moves up, 1, 2, 3, 4, 5. We think we're in that 5th and final wave. So what we're going to do is we're going to come into the more recent price action and we're going to dig out the count from there, and I can show you what I think we're looking at and give you an update for the more recent price action. So from here we're counting 5 waves up on intermediate time frame like so, and we've done the 1, 2, we've done the 3, we've done the 4, no overlap of the 4 over the 1, so an impulse wave, and now we're looking at 5 waves up into the 5th, into what is a bit of a blow off top out into the midsummer. Okay, that's now what I'm expecting. So it's the same old count we've been following, but we've moved our upward projection somewhat to go beyond the fib channel we've got here. Okay, so what I've done is joined the 2 and the 4, projected it from the 3 to find the 5, but I think given the recent price action, I honestly feel we're going to go higher now. It's just so bullish, and I will talk you through how I projected that now. First thing I want to point out is 13 green closes in a row. 13 green daily closes in a row. Now, I can't find it. Now, I haven't looked admittedly through the whole chart, but I challenge you to go back and find me 13 green candles on the SPY. Okay, if you do, let me know in the comment section below. Somebody found 11 when we last looked at this thing, but see if you can find 13. Either way, crazy bullish. Crazy bullish. So we're going to come down to the 2 hours now, and we're going to look at this initial move up off of the intermediate 4. Wave 3, into wave 4, into the 5th of the 5th of the 5th of the 5th. Okay, that's what we're saying. So I wanted to count this initially as a minor 1, 2, minor 3, 4, into a 5, but I'm just not buying that anymore now. I think this is minute 1, 2, 3, 4, 5, into minor 1, 3 waves into 2, which means we're in a minor 3 and it hasn't completed yet. So all I've done here is given this final bullish move the benefit of a doubt of running and hitting the normal impulse wave limits. So we're going to focus on looking for a 618 extension for the wave 3, which is where I projected the minor 3 here, and then I projected the 4 at a 23.6% retracement of that 3, and I projected the 5 at an extension of the 1 projected from the 4 to find the 5, and that puts us all the way up here around 440 on the SPY, 4,400 or so on the SPX. A lot of potentially a big move to come up. Okay, now I am projecting, if you look at the shorter time frame from the wave 2, here we can see that we've got, if we come down to the 1 hour, we can see that we've got 1, 2, 3, 4, 5 into minute, these are minuet waves into minute 1, A, B, C, flat here into the 2, and then we've got a 1, 2, 3, 4 sideways action here, so suggesting that it's some kind of a double combo into the 4, and then finally 1, 2, 3, 4, 5 sub-minuet waves into minuet 5 into minute 3. So I think we're close to topping out into minute 3. We'll waste some time in minute 4, push up into minute 5 into minor 3, then minor 4, then minor 5. So potentially a lot higher to go yet. I know it probably pains you bears out there, which we've had conversations in the past. I'm also bearish as well because it's, it's 12 years into a bull market, but we can't call the top until the top's in, and it doesn't look like it's in yet. Okay, so that's our basic count that we'll be keeping track of for months. Now I just want to share with you an alternative count, which is also bullish, but we just count things a bit differently. And this is an ending diagonal in the SPY. Now, I've been saying for the longest time that I didn't want to count this pivot as a wave 2, but the ending diagonal demands that we do. So that's what we're going to do, whether we like it or not. We're just going to have to project as best as we can. So we have a 3 wave move, zigzag A, B, C into the 1. We have A, B, C, zigzag into the 2, A, B, C, 5 waves in the C here, into the primary 3, just as we saw 5 in the A, 5 in the C here for a zigzag. We're seeing 5 in the C of a flat here to find the 3, in extension of the C. Another move down A, B, C into the 4, and now we're looking at A, B, C into the 5 to complete somewhere around that 440 level. Now, what's typical of a rising wedge here, this is a typical ending diagonal, so every wave has to be 3, 3, 3, 3, 3. We can't have any 5-wave structures in here, so we're interpreting everything in a series of 3s to form an ending diagonal. Very typical in this overthrow. or very typical I should say, of an ending diagonal to have an overthrow, and that's what we seem to have here. So we'll go up, we'll roll over, test the top of the wedge for support, bounce maybe, it'll then come back through, fail, and then we'll collapse into late summer. And that's how the ending diagonal counts. What I find compelling about this count is on the daily time frame we had this big gap here. Okay, between the first and the fifth here trading days we gapped open. And we basically cheated our way out of the wedge, back tested it here, and then bounced higher. So we escaped the wedge here. So this looks like a breakaway gap, a bullish breakaway, an acceleration. So we got out of a pattern, and now we want to rush as far away from the restraints of that pattern as possible. You know, the bulls want to get away from all of this potential trouble, and they're going to just drive the price up to do it. We'll come back, test it, it will fail, and down will come. Now, this gap could get filled in the short term by coming down to a wave 4 to fill the gap. Still not overlapping over the wave 1, could have a deep 4 before pushing up the 5. My personal suspicion is that we will fill it later. We will come down later and fill this gap as the price crashes. So, yeah, you know how I feel about gaps, they tend to get filled. You know, I've discussed them before. Next thing I want to show you is I just want to hide these trend lines for a moment and show you a piece of support, geometry support for the idea of this ending diagonal and the channeling that we're currently following. We're using a shift pitchfork to do this. So all we're doing is placing the start of our shift pitchfork on the March low, then we're going to swing high, swing low, 3 wave move into our first move up, 1, 3 wave move into our next move down, swing high, swing low. As you can see, from this point, the price has been really well confined around the median line. All of it here. Bit choppy, gradually progressing inside of this shift pitchfork. Now, the edge of the shift pitchfork, this channel here, coincides with our fib targets from our other count, the 1.618 and then the 100 projected from our proposed 4. It all meets up here at the edge of the pitchfork, and that conveniently accommodates our idea of an overthrow of the wedge structure. If I just show you what I mean again, so here's our rising wedge, 1 to 3 to find the 5, except the 5's not here, it's here, and we get an overthrow which meets on the edge of the shift pitchfork. And that's it. You know, that is how I interpret the Elliott wave count at the moment. This diagonal pattern, I'd be interested to hear what you think about it. Do you think it's the right pattern? Let us know in the comment section below. Or do you prefer the initial count? Both of them, this is as a clean impulse, this is as a diagonal. Both of us have us moving higher for the next month or so. Sucks to be a bear, it's just the way it is at the moment. It's just a crazy market. Like I said, have a look for those 13 green candles. I think that's absolutely amazing. Right, so before we leave, we're just going to go into our basic analysis, bring up our moving averages quickly, and our indicators, and see how things look. So a quick rundown of the indicators you can see in the chart. We're going to switch to the weekly time frame, and we're just going to zoom in on this noise here. So what can we see? So we have 4 exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have our volume profile on the right hand side showing the peaks and troughs of the buy-sell volume, with the point of control being represented by this yellow dashed line. We have an RSI set to a 10 close. Green 30 level is oversold, red 70 level is overbought. We have a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. Right then. We tested the 20 exponential moving average on the 1st of March, and we haven't been back since. Just all bullish news since. Another bullish series of bullish candles above the 10, above the 20, above the 60, above the 250, miles from our point of control, miles from the 250. At some point, we will come back to retest this 250 at least. We did it here, and we did it also during the COVID crash. As we actually wicked through it. Oh well, didn't wick through it, we barred through it, went down significantly. Okay, RSI is back into overbought territory. Any bearish divergence we were looking at in the short term here, we had a series of lower highs on the weekly time frame. That's been cancelled out now. It's just too bullish. It's pushed back and cancelled out that bearish divergence. Short term moving average crossing over the long term moving average on the MACD. Green bars appearing in the histogram, accelerating higher, well into positive territory on the MACD, and showing no sign of slowing down yet. If we come into the daily time frame, still above all the major moving averages, into more overbought territory here, at around 78.95, showing a sign of rolling over slightly, just as we're seeing in the MACD short-term moving average starting to roll over. Some dark green bars on the histogram here. That likely coincides with my projected minor 3 or minute 3 into minute 4, so we could see a pullback in the short term, but then we'll likely just come back below the oversold and then push on back into overbought territory. Sorry, I say oversold, I should say overbought territory, to seek out that 5. So basic analysis is supporting what we're seeing now in the count. We see more bullish activity, and I see us going out into the summer into a topping pattern before we finally call till we finally call bullshit on this whole 12-year long bull market, the longest in history, driven by the highest and greatest amount of stimulus we've ever seen. So I think the party's going to be over, but it's just not going to be over as soon as I initially thought. It's going to take a little while longer, and that's it, guys. So if you're new to the channel, you've liked what you've seen, please subscribe, smash the like, let us know what you think in the comment section below, hit the little bell notification icon to remain informed of future video releases. And before I leave, I just want to say thank you to all my patrons. Your support is greatly appreciated. If you're not a patron yet and you're interested in joining, or you at least want to see what's available, then there's a link in the description below. Go and have a look, see what you think, and if you're interested, become a patron today. I also have a Twitter feed. The link is also in the description below. Please go and follow me to remain informed of future video releases and any other thing I want to share. Alright then, guys, take care of yourselves, and I'll be back with you soon. All the best. Bye bye.